Okay, good. Okay, and what I'm going to do is show you guys kind of an overview of what we're going to talk about today. This is kind of an outline format, but again, we want this to be interactive. So at the end, we're going to open this up for some questions. But broadly speaking, I want to start off by talking about why insurance works, because we're going to spend a lot of time talking about some case studies and kind of some challenges of navigating the claims process. But I don't want to give you the opinion that we're not believers in the insurance itself. It has an important role in all of this. And it's just about how do you navigate the process the right way. We're going to talk a little about what's going on the provider landscape, especially with COVID, when people are activating their policies. There's a shortage of caregivers, and how are we able to cope with that, and how is it affecting the costs? And then just a little bit about the process itself, like the steps needed to file a claim. And then I'll tell you a little bit more about what Linda's doing and how she helps clients at the end here, and how you can reach out to her. Her contact information is in the chat box. If you check that, you can, her phone number and her email address is right in there. So let's jump right into the next section here, why we believe in long-term care insurance. And the first thing that I would say is, when I think about insurance, and I was telling Linda this yesterday, an auto claim, and it was, there were some challenges with that. But I really valued the policy at the end of the day, what the insurance company was providing, because they helped me navigate the auto insurance providers. Long-term care is kind of the same way. It's a funding mechanism, but why do you, Linda, believe in the long-term care insurance policies themselves?
Well, from my own personal experience, my grandfather, my aunt, my grandmother all ended up needing long-term care and running through all of their resources. More than that, though, our family was completely unprepared because we didn't discuss the topic and nobody even understood what long-term care was. So if you look at the current situation with our healthcare industry, in particular, people that are on Medicare, the vast majority of services are provided outside of a hospital setting and even outside of a setting of a skilled nursing facility. Well, where are those services being provided? In the home and in assisted living facilities, and all of that is private pay.
Yeah, exactly. And, there's 44 million unpaid caregivers as well. And we don't think about how much that value of their time is. I think that there's about $500 billion a year for unpaid caregiving services right now. I think the number one reason that I run into is that people are trying to protect their families. Linda, what are you seeing why people are buying policies?
Well, the issue of dementia is a huge concern for people. I think, in fact, we were in LA recently, and I don't know if there's a campaign going on with the Alzheimer's Association right now, but all of the bus stops, the different advertisements, billboards, there were advertisements for understanding dementia. And I pointed it out to my husband and I said, that is really interesting to me. So I think that people are very concerned about this, because back in the day, when we would talk about families caring for one another's, I mean, maybe we would think about something like the Waltons or whatnot. But from my understanding, what I've heard other experts say is the baby boom generation is probably the last generation to really be that first line of defense as caregivers for their parents, just because of how society is changing. Families are changing, demographics, and people are not living by one another. Not to mention the fact the world is very complex, and our kids, we probably are not going to be able to rely on them. So these are just facts. And I think that's one of the things that is driving people to think about, gosh, actually, my mother took care of her mother and her mother took care of her mother, but I don't know that I can take care of my mother. And I don't want my kids to necessarily do that. I think I'm going to make sure that I can fund that. Now, whether they buy long-term care insurance or not is another question, but having the conversation is critically important because of the longevity that we're looking at. So I think there's lots of factors that go into it.
Yeah, and I think you kind of hit the nail on the head, which is it's about funding and helping people find a way to save and to pay for the costs of these, because it does become expensive when it takes a village and all of these different facets to this. The other thing I think that's evolved is over the past 30 years, aging in place has become more of a desire. People want to get care at home. And the insurance policies have evolved so that they're providing home health care as probably the number one benefit that they offer. What are you seeing when people are activating their policy? Like what percentage of your clients are using facility, like an assisted living facility or a nursing home, versus actually getting a home health care agency and a provider that way?
So this, of course, is anecdotal information because it's my experience with our clients. Right now, we have about 150 open claims. Every year that we've been doing this, we've had between 100 to 175 open claims a year. And in that year, more than 70% of those claims are in the home. And the vast majority of those claims, people are receiving anywhere from 4 days a week, that's typical, 4 days a week of care, 4 to 5 hours a day, all the way up to 24/7 if families can manage that. The majority of our folks that are in their home getting care, staying in their home, are married couples. The majority of our clients that end up going to facilities, right now we have about 60 family members that are in facilities that we're managing their claim. They're typically single. And there's a reason for that, because no matter how much money a person has, and that could be insurance or just private funds, it's difficult to manage a person in their home, especially if they have a dementia diagnosis. There's so many other things that come into play other than just, do we have a home care agency that we like? There's upkeep on the house, there's the financial, there's the food, there's the shopping, there's the doctors. I could go on and on. It takes lots of people to support somebody in their home, which is why if they don't have a spouse or a family member or a friend that's living with them, they usually want to go to an assisted living facility.
I see, that makes sense. I know one of the carriers did a survey and they estimated that 75% of their insurance claims are for home health care to start off with. They don't all end up in the home because, again, you may transition from a home environment, like you said, when you're a couple. And then when you become a single person, you may end up transitioning into a more of a community type of setting. And that just makes the most sense. But at the end of the day, I think the key to remember is that the insurance companies are offering these products, and they do have a lot of passionate people in the home office that want to help the clients. Okay, so even though it feels like a confrontational process, sometimes filing a claim, they're really taking the role of gatekeeper, making sure everyone's eligible, which helps to keep the cost down for everyone else.
Yeah.
And so when you think of it that way, that we're all kind of collaborating here to make sure the right people are getting the care in the right ways, then it starts to make sense, the process and why they have these steps in place for activating the policy.
I kind of look at it in the same way, Mark, and we've talked about this when a person goes to the doctor's office. And that's sometimes why it's a shock for people when they file a claim with a long-term care insurance policy, because they have to actually participate and do quite a bit. Whereas historically, people that are on Medicare or just go to the doctor and they have their healthcare card, they don't have to participate with that process. They just show a card. This type of insurance is not that way.
Mm-hmm. And then some of the companies have more experience than others. The ones that actually have more claims on the books, in a lot of ways, have refined their process and know what to expect. A lot of the companies are starting to get more claims, and they're going through some growing pains figuring that out. And so each company is going to be different. If you have a CalPERS policy, even with the state, that might be a different experience than working with one of the private insurance companies. So again, Linda knows all the different carriers, and who matters a lot in this business too, and helps, again, her clients navigate the process. So let's jump into the next section here. We're going to talk a little bit about insurance coverage and the provider side of this, just to give a landscape. So I'd mentioned that a long-term care insurance covers you in a variety of different settings, and more often than not, it's home care these days. How are you seeing that environment changing? Obviously, we've been in the COVID world now for about 8-9 months or so. What are the challenges that we're seeing on the provider side with having people come into your home, again, especially with COVID, providing care? Are people becoming resistant to wanting to have that?
Used to be when COVID first started, I'd say right around March, April, May, everything just shut down, literally, not just going out, whatnot, but people who needed care decided, I am not having anybody in my home. But then obviously, as this thing has lingered on, families have to get back to doing what they do, and families need help. Just because of COVID, it doesn't mean that somebody who has dementia and needs supervision doesn't need that anymore. So, but however, what we have found is as things have picked back up again, and as we're bringing in more care providers, what we're seeing is care providers are having a little bit of a hard time with staffing. And I'll give you an example. The day before Christmas, one of my clients who was preparing a family meal in her kitchen slipped and shattered her pelvis. Just a terrible fracture. Well, it's the night before Christmas, right? So she's whisked to the hospital. She was in the hospital not even 24 hours. They could not find a bed for her in a skilled nursing facility, couldn't find one. So they sent her home in an ambulance at about 11 p.m. to her husband and her older son, who had no clue how to even use a bedpan. And so what do? Well, they called me and I got on the phone and I was able to contact 3 different home care agencies, and between the 3 of them, they were able to staff immediately, but not everything she needed. And the reason being is because it was a holiday, of course, but also the pool of caregivers is short and reduced. And the reason being is because there's so much protocol that home care agencies have to use. So for example, if one of their caregivers decided to, go on a little vacation or go see their children, that caregiver is pulled off the case and they're quarantined. If a caregiver has a runny nose or a cough, obviously they're not going in. So now the caregivers, the staff, the bench, so to speak, where we could pull somebody from is shorter. And so home care agencies have had a real struggle, and it is hard for us to staff cases if a family does not want to have consistent care. So for people who say, I just want to have somebody come in a couple days a week and for 2 hours, we can't find people to do that now. We may be able to again after COVID, but what we're doing is we're recommending our clients when they file claims to staff consistently, because we're going to be able to find an agency that can do that.
Wow. And it's interesting. I think about all the sacrifices that people are making right now with COVID. One of them is I'm sure a lot more people are stepping up to help take care of their parents, because they may even be fearful of them, contracting the disease in the facility or from the home healthcare aid. To their credit, I think the providers are doing a good job of implementing the PPE, the protection equipment, and testing of the people that are going into the homes. But I think all of that means that it's getting more expensive.
It's getting more expensive. And from what I hear in the industry, and maybe this is too of an overstatement, but I understand that this is going to be the way it is for a long time, even after the vaccine, even after, that this is going to have an impact in this industry for quite some time.
Yeah, and you'll probably hear this a lot, that Linda and I are advocates for planning. And I think a key part of this is, regardless of how you want your plan to be, whether it's having your family help you, whether it's paying for this out of pocket, whether it's buying insurance, those costs you have to think about in the planning process. Even before COVID, we saw the cost going up probably around 4 or 5% a year, which again is much higher than general inflation. And that's because there's a shortage of caregivers. Caregiving is difficult, and that's why it's hard to find people to do that. The facilities as well. There aren't a lot of really high-end facilities that you can go to. So when you're thinking about planning for long-term care, just make sure that you're budgeting for it, that you have at least something in mind, and even a little bit goes a long way. Even buying a small insurance policy can go a long way, because if it can provide 2 hours of care, that's a big deal. If you're otherwise providing 8 hours of care, your family is providing that. Having someone come in for 2 hours is going to make a big difference in their lives. Now, I wanted to kind of switch over a little bit to what you're seeing on the claims side again. And you'll see here, it says pre-Hipaa and post-Hipaa. And there is kind of a delineating factor. I think with a lot of the claims that Linda is seeing today, those clients bought the policy maybe 25 or 30 years ago. And prior to 1998, the language in the long-term care insurance contracts was not as standardized as it was after 1998. And so we call this pre-Hipaa and post-Hipaa. Give us an example, Linda, of what you're seeing like with the pre-Hipaa like policy language that makes it differ from what you would see today.
So this issue is very important, because there are a lot of policies still on the books, and a lot of people that are now probably in their late 80s, early 90s, and even in their 100s who purchased these policies. I'm going to give you an example of a different language. So in fact, we just picked up this case a couple weeks ago. And this is kind of a cautionary tale of why, when somebody files a claim, you should understand what you have, or get it to somebody who can explain to you what you have. So the pre-language, assisted living facilities and memory care facilities were not mentioned. It wasn't a thing. Now we all know it was a thing, but it wasn't something that was specifically noted in these policies. There's special language that says if you have a different place you want to get care, we might consider, but it's messy language. And so for some of these folks, when they call us, they say, and usually it's in somewhat of a crisis situation because things have been building, and they say, we just put mom in this community. We have to do this, and here's her policy. And I'll get the policy, and it's a pre-Hipaa, and it will say something like, we will pay in a facility, and that's it. But it won't name assisted living, and it won't name memory care. Well, that's a problem. So at that point, we have to do a little bit of a digging and research and find the community that matches that definition. And that's not easy to do. Some of these policies require certain parameters, like a nurse has to be 24/7, for example. Now, policies that people buy today are not like that. Policies that people buy today are very specific, and people can be rest assured that when they buy a policy today, if they need to go into memory care, they need to go into assisted living, it's not going to be questioned. There's no problem. We all agree on the definition and the standard. But this is why I tell people, if you purchased a policy and you've had it for 25 plus years, get it to somebody who can explain to you exactly how you can use it.
Yeah, and that's also how you know if you're looking at purchasing insurance, whether the person you're talking to is a specialist and knows what they're doing. Because usually the first thing they'll ask the insurance company for is a copy of a specimen policy language, the contract. Because guess what they do on the claims side is the claims adjusters are trained on how to read the contract. And that's what's going to be the guide for them to determine how to adjudicate whether you're eligible. But as Linda mentioned today, it's a lot cleaner because the government enacted this regulation in 1998 that says policies have to have these standard set of definitions if they're to be called long-term care insurance. And the triggers, generally, let's just kind of cover that just in case you're not familiar with it. What are the general triggers for activating the policy that make you eligible to receive the benefits?
So I get asked this question a lot, and it's an important question because people who have long-term care insurance have in their mind sometimes that they have to be bedridden or on hospice in order to file a claim. And that's not true. Most policies, especially the policies that are purchased today or after the year 2000, give or take, in the event that the individual needs standby for safety or hands-on assistance for safety, help with their activities of daily living. And activities of daily living, there's a list of them in each policy. Most policies have 6, some have 5. And the insurance company says you are eligible to file a claim if you need assistance with at least 2 of these things. And I'll just go through them real quick. Showering, dressing, so getting in and out of the shower, dressing, getting in and out of the bathroom, called toileting, continence care, transferring, and eating. And in general, most of our claims fall in 3 categories: bathing, dressing, and ambulating. Note, I didn't say toileting and continence, although those are problems. Most people just fight to the bitter end so that they don't have to have someone help with that. But bathing and dressing are 2 that we generally will file claims for most readily. Then there's also another path a family can go down. Let's say somebody can do all those things. They're strong, they can still get in and out of the shower, but they have dementia and they're not remembering or recalling how to turn the water on, or what goes first, what goes second. If a person has a diagnosed severe cognitive impairment, that's a trigger, and they are and should file a claim for that as well. So it's one of 2 things: either needing help with their activities of daily living, or if they have a cognitive impairment.
Yeah, and you'll see as we go through this, the importance of those triggers, because it kind of goes all the way through the process in terms of the insurance company. And what they're trying to do is validate that you meet that requirement. so that they can activate the policy, and as the gatekeeper to protect everyone involved, that they're providing the benefits to the right people. So let's
Mark,
jump.
can I just add something really quick about that before we move on, just real quick, because I don't
Sure.
want to forget about it. It's the activities of daily living. A lot of times I'll get a call from family members and they'll say, we need to file a claim because mom needs help making her meals. And I'm concerned about her getting to the doctor. She needs transportation. She's not driving anymore. We want to file a claim. And as you can see, preparing a meal and transportation, I didn't list those in that list. And so in that type of a situation, and we'll get into this a little bit later in the conversation, but this is why it's important that people understand what exactly are the foundational physical needs that the insurance company is asking you to meet.
Yeah, and those are the federal definitions in HIPAA to have those triggers in them. So there's no choice for the carrier. They have to offer that. But again, it's to protect the consumer at the end of the day. The other things that Linda's mentioning, the IADLs, the instrumental activities like cooking meals and things of that are also important, but they may not be able to be performed because of the ADLs, which are the triggers for the policy. So let's jump into the next section here, which is the information that's needed to file a claim. And this is just kind of a series of different questions to ask, if you're going through this process, either for a loved one or if you're curious for your own insurance policy. So first thing you put here on your question list is, who are your community care partners? And what exactly do you mean by a community care partner?
Well, it's interesting to me, and this is just human nature, and I'm the same way, that I would have a long-term care insurance policy, but I have no clue who I would call if I need care. That's so common. Community partners would be something like, who are home care providers? Talk to your friends. I mean, if you are aging in your community and you've been in your community for a period of time, you will know somebody or get to know somebody who has used a home care agency or a home health care agency for PT or OT. In addition, I do see, which is good, a lot of our clients are starting to shop for continuing care communities, places where they can go and live and move along the care continuum, like assisted living or memory care. And there's just scads of them here in San Diego. But it's important to know where you might be interested in going, and to do that and to get that information before a crisis situation happens. It's kind of like having a power of attorney. We tell people all the time, you have to have this documentation in place, because if something happens to you and you don't have it in place, it's pretty difficult. So the other thing that people need to understand is, and this goes back to what's in your policy, what do you have? Nobody remembers the benefits that they selected, because this type of policy is something that folks buy and they put it in a file or they put it in a safety deposit box, and they probably haven't even given it to their children, adult kids. What is their waiting period? So for example, how long do they have to receive care before that policy is going to kick in? That's important to know, because that's a budgeting issue. And then the other thing here in California, which is a little interesting, is the vast majority of contracts that were written in California allow people to hire independent caregivers who are not working under the umbrella of an agency. And that's a whole nother topic that we can discuss, but that's important to understand if you have that option. And then home modification benefits. This is a big one. I didn't think that that was going to be that big of a deal, but here's why it's a big deal. So we have clients that are progressing into, for example, Parkinsonian syndrome, and they have lived in their house that they've been in for 40 years. Well, do you think that their bathrooms can accommodate a caregiver and another person? No, they cannot. And so these modification benefits are hugely important, because we do have clients that just bang out putting a new bathroom in, putting a new shower, a safe shower, and those benefits are rich in a lot of these policies, and they're wonderful. And then the other thing is that we can talk about is proof of loss and severe cognitive impairment and whatnot. But once again, if you have a long-term care insurance policy, and I think I may have said this, but I'll say it now, if you want me to review your policy, I am happy to do that. But if you don't know what you have, call me.
Yeah, and I think that's the key is all these questions that you're asking are components of your plan. And so we say, what is long-term care planning? Well, it involves a number of different things. Who are the caregivers? How is it going to be financed? Right. And I think these questions are getting you to the point of helping kind of go through the process of, okay, I know what visually this is going to look like, my family or my power of attorney or whoever it is. Healthcare proxy is going to know what to do, what I want my wishes to be. Especially you mentioned severe cognitive impairment. I can picture a lot of people who are in that scenario, right? Or they're going down that path. They probably want to lay out their wishes in advance, right? Because they may not be in a state where they can tell people what they want their care to be or to look like. So that's why this documentation is so important.
I mean, it's the type of thing that, let's be honest, long-term care is not something that I want to have happen to me. I have a long-term care insurance policy, but I do think that there's just a mindset when people buy it. They're like, okay, I did it. I bought it, maybe under duress, didn't want to, but I did it anyway because it's the right thing to do. And I don't ever want to think about that thing again. And that is not what people need to do. They need to think about it and bring it out every now and again.
Yeah. The nice thing in a way about this community, this world, and this is why we started Buddy INS, is that there are so many advocates out there that are trying to help with this issue, right? And it affects so many people out there, elder law attorneys, right? Gerontologists, the providers, right? The insurance agents, the insurance companies. And so we all try to partner together because each of those professionals provides a unique aspect to this process. So definitely connect with the people in your community. Like Linda's obviously a great resource for you, but we're also connected to those other providers because of different facets that come up. Like, how does this coordinate with Medicaid or Medi-Cal? What do I do with the CalPERS, program versus a private insurance policy? It may require reaching out to different professionals that are experts in those areas. Let's jump into the steps, and then this is going to make it clearer, I think, what this process looks like. So kind of, Linda, take us through, if you have a new client as kind of an example, like a case study here, what exactly happens? Like, how do they know, that they qualify, that they need care to activate their policy? What does that look like?
Thank you for asking this question. I always try and explain this process in a way that does not necessarily paint the insurance company as a villain per se, because when I share some of this stuff, it's going to sound like the deck is stacked. And I don't mean for it to sound that way, because it isn't. But it's important that consumers understand, just like when you had your automobile claim, you have to know what the insurance company is looking for. And because this claim is so unique and it's inherent, it has inherent problems because of the population, meaning an elderly person or somebody with a cognitive impairment process, it makes it really hard for them. So this is why we do this. Step one is sometimes where these claims go sideways real quick. And the reason why is because this, you have to call the insurance company and tell them what your problem is. And historically, most people are not genuinely super excited about filing a claim. They're either forced by their family or they're under some kind of duress, but they really don't want to do it. And so it doesn't take much for them to kind of talk themselves out of it. I'll give you an example. They know that there has to be something wrong with them when they call the insurance company. So the insurance company is going to ask them, tell me how you get in and out of the shower. And the person will say, well, I do this, and then I do that, and then I do this. And from the insurance claims perspective, it sounds like that person can do that. But really what the reason they've called is because they're not showering as much because they're terrified of falling. And they know that's a problem, but they're answering the question as they're being asked. Another question is, how do you get in and out of your clothing? How do you dress yourself? And a person might take an hour and a half to bend over and put their pants on, but they're going to tell that claims adjuster that they can do it. And so that's why when we help people understand how to answer the questions, we tell them, we don't want people to lie, but we do want to understand what's going on with them so that when they call or have us call, we're giving accurate information, and we're explaining and painting the picture to the analyst what the problem is and why they need to send a claim packet. Number one. Number two, so the first thing is just kind of overcoming the client's just initial hesitancy. Now,
Can I jump in real quick?
yes.
Because you had said, here's a great question to ask yourself or to your family if you're going through this process that Linda taught me, is ask yourself, what do you do on your worst days?
Mhm.
How does that look? Because I think people, like you said, have a tendency to want to share what's going on in their best days when they're able to do these things, as opposed to when they're unable to do it. And I think that paints a better picture. I thought that was a good tip there.
It is. And like I had said previously, the whole issue of incontinence and continence, it's such a personal issue for people that they don't even talk to their doctor about it. If I had $1 for every time my client got a UTI because they are not managing their continence properly, and for people who understand the damage that those things can do to people, they wouldn't be so guarded, but people are very guarded with personal information. So the next thing is, once that hurdle is cleared, then there's an on-site assessment. And this is, understand, this is not the insurance company, it's an administrator that they've hired to do this work to collect the data. The assessment is done by a nurse. And most of the nurses that I interface with in this area are amazing. They're wonderful. They want to get to the core of what's going on. But once again, if the person being interviewed is withholding information, or even just not remembering, the claim's not going to go well. Because if that on-site assessment, if the nurse does not see with her own eyes or hear with her own ears that the person needs help with their activities of daily living, they're going to write that down and the claim is going to stall. The other thing is documentation collection. And this is just difficult these days. Unless you have a password and an ID and you can get on your medical records, trying to get medical records with busy doctor's offices or busy facilities, especially now with COVID, everybody is so pressed doing the most important thing, what's on fire today, that getting documentation is very difficult. So for an elderly person who gets a letter from an insurance company and they say, we need 5 things, it's pretty hard for them to go out and get it. They don't even know where to start. So they file that little piece of paper away and think that everything's fine, and it's not. The claim will stall. Then the next thing is handling invoices. And there again, so we have home care agencies that are amazing, and we have home care agencies that are providing excellent care but don't understand how to document. And that's just their business practice. They just don't understand it. They probably haven't had a lot of long-term care claims, and so they're not used to documenting. They're supposed to be documenting, but we know the agencies that are used to it, they know what is needed. So when we get claims, and I just had one recently where both the husband and the wife were approved, but from March all the way through October, every single invoice was denied by the insurance company because the activities of daily living was not marked. Super simple. We just resubmitted everything and they got their money. But an elderly person generally isn't faxing, they're not emailing, they don't know how to get on the website to upload that information. And so that's why we do that for people. And then the last thing is just verifying that everything's fine. We see what's being paid. And once again, the money goes into our client's bank account. And for a person who is cognitively impaired in a memory care facility and has no secondary level of like a fiduciary or family, how would they know if a month has passed and so didn't send in such and such and they didn't get their benefit into their bank account? How would they know? So that's what we do. We verify all of the benefits and we make sure that everything's going where it needs to go, so things are paid.
Yeah, and it sounds like almost simple that, okay, well, it seems like the process should be X, Y, and Z. Because every long-term care claim is different, every person's situation is different. The insurance policies, like we talked about, the contractual language may be different. That's what makes it difficult for everyone involved. But having someone like you with the experience that's gone through it so many times knows exactly the road to follow.
Yeah.
And what happens when it goes sideways? You kind of talked about that. If you don't get this set up right from the outset, it can go sideways. Give us an example of what that means.
I think the biggest sideways issue is would be cognitive claims. And the reason being is because the definition in these contracts are pretty standard, but they're specific. They say that in order for a claim to be approved for a cognitive impairment, the person has to exhibit certain symptoms and be a risk and have a diagnosis. And so a lot of times people will file claims and they haven't gone to a neuropsychiatrist. They don't have a diagnosis. They've just seen their primary care physician who does that once a year, MMSE, Medicare, mini mental, and they haven't done very good on it. But that is not enough information. That's not enough documentation. And so when we get claims like that, what we do is we slow the process down. We stop the process. The insurance company might be doing what they're going to do on their end, but we stop and we have our clients back up. And the reason we have them back up is because we want them to go and get what they need. So, we've talked about this, Mark. One of the things that's frustrating is when a claim gets denied, it's because there's not enough proof. Why is there not enough proof? Well, generally it's because nobody's talking to the doctor, nobody knows what's going on in the family, and nobody's really addressing the problems that are very hard to talk about. So still, elderly people and even non-elderly people will go to their doctor and not talk about the elephant in the room. And I have seen documents and clinical note after clinical note where the doctor is like, looks great for her age, walked to the appointment herself, and then the woman's living situation is a disaster. And so there's a gap there that we have to help close. So in some ways, I'm thankful for this process because it makes everybody back up and say, wait a second, we have to get this person help. And we start with professionals, and professionals are going to tell us what is wrong with this person. They're going to get some medicine, or they're going to get this, or they're going to get that. Then we're going to go back to the insurance company and present what we have, and we are successful. But that's hard. It's hard to do that. It takes time, it takes patience, and it takes people to cooperate.
Yeah, and I think the key thing to remember is, the insurance company is looking for that documentation that that person is eligible by the contract language. And when they say no to a question, later on they say, oh, just kidding, I meant yes to that question. Now you have to go through another stage of, okay, well, why did you say no the first time? Why, they want to just make sure that they are eligible, is accurate, and, it's honest as to what's going on. And again, that's for everyone's best interest. So it's good that they're asking the questions, but they're basing the actual results, on their situation. And I think that kind of segues a little bit into the plan of care topic. So I think having a plan, and that's one of the nice things about, again, working with professionals, is they know what to expect because of their experience. And so they can kind of craft a plan that makes sense. The insurance company have this in their contract language too, that you need to have a plan of care. What does that mean within the insurance policy exactly?
So that's such a great question. There's a lot of misunderstanding around that. People think when they read their contract, it says your claim will be approved if you adhere to the plan of care. And an insured will say, well, does my doctor write the plan of care? No. The claims analyst or the third-party administrator writes the plan of care after they get the information. They're writing the plan of care. They're saying, based on the information we have, you need X, Y, and Z, and you need a number of hours of care. And so we have to adhere to that. So I'm just going to give you a quick example of why that's a good thing.
Good.
So I have a lot of situations where one of our clients is refusing services for many reasons. People do that. There might be some paranoia or some hesitancy, fear. And so the insured will say, well, I'm not going to get that. I don't want somebody to help me with my clothing. I don't want somebody to help me get in and out of the shower. And everybody knows, my goodness, you have to have this. Well, because of the plan of care, what I can do is I can come to the client and the family and say, listen, we have to stick to this. We have to do this. She needs this, he needs this. Now we're going to have to figure out a way to get this done, because if the plan of care is not followed, and it's a good plan of care, it's right, we're not going to get the benefit. And so from that perspective, it's good because it brings some pressure to bear on the policyholder to sort of move along with the process. And that's important. It's not taking rights away from that person, but it's putting safety around that individual so everybody's on the same page. So that's what a plan of care is. Now, the downside to the plan of care, what that means is this: if something changes, so let's say the insurance company, and we had mentioned CalPERS, says, based on the information, we think that you, we're going to approve 4 hours of care every day. And let's say my client is getting worse, and I know she's getting worse or he's getting worse, and now the client wants more services. We have to go back and ask for a change of plan of care. And so that's kind of a downside to it, but it's not a big deal. It's just something we have to do. Point is, people can't do whatever the heck they want to do. They have to adhere to the plan of care, and they have to understand what that plan of care is.
Yeah, and I think that also connects with recertification, which basically means validating the claim maybe afterwards. Sometimes the carriers are looking every 3 months or 6 months. Usually it's at least once a year to make sure that person is still eligible. The benefits in the policy sometimes are as long as 5, 6 years today. Some policies still have unlimited lifetime benefits, and many of the older policies have that, which means that you could be needing care for many, many years, especially with the cognitive impairments. The insurance company wants to make sure that you're still eligible for the benefits. What does recertification look like? Is that a lengthy process, or is that pretty straightforward?
It can be straightforward as long as we get the documentation they're asking for. It gets lengthy when they don't get what they need. And usually the documentation is from the care provider. What are you doing? How is it going? Or they'll go to the doctor and say, do you still agree that your patient needs assistance with this, that, or that? And so we get notification because we change the address of record when we file a claim for our clients, so that we get all those notices. So we know, okay, this is coming up. We need to take care of this for people. A lot of times our clients don't even know it's done. We just send their power of attorney, the new updated plan of care, and try not to make a big deal out of it, but it does take place once a year at least.
Yeah, and I know a lot of people, they'll ask me the question, well, I bought this insurance policy. You assume that, okay, well then, of course, the process, they're going to take care of getting you to the providers, right? Helping you navigate through this process. And the answer is, it's obviously there's a lot of things involved, as we've talked about. And that's what Linda is doing. That's kind of her business itself, is she's the concierge. So these steps that you see on the screen, this is really what she does day in and day out to help clients. But don't feel like you have to purchase her services. She's available to answer your questions. It's just the time that's involved in helping clients in this way. That's really, what's involved with the business aspect itself. So I'm going to go ahead, and I know there's some people that may have questions on the line. I want to leave a little bit of time here. If not, we'll kind of cover a few more topics. But when you're looking for somebody to help you with this, just make sure that they are an advocate for you, right? That we're doing this to build awareness around these elder issues. We see a lot with elder abuse happening, both because there is no insurance policy, but also because there are benefits in the insurance policy that someone else may be trying to get from because they have the financial power of attorney over somebody else. So again, we can help connect you to the right resources if you're afraid that somebody's being taken advantage of here. And let me show Linda's contact information too. If you want to reach her directly, I'm just going to leave this on the screen for you. Feel free to jot down her information if you have somebody that's currently going through a situation and you want to reach out. Let me go ahead. I'm going to just check out for any questions. I saw there was one in the chat box. Ishelle, if you are on, let me know if you see any questions in there, because I'm going to have to minimize the screen to get back there.
Yeah, there is one question. It's from Aileen. CalPERS has temporarily suspended open enrollment on their long-term care program due to current uncertainty in the long-term care market. Are they in trouble?
Yeah, that's a good question. Linda, do you want me to take that one?
Sure.
So that's more from the insurance company perspective. And we get this question a lot in the private market. There's news about Genworth, which is a large provider of long-term care insurance. And they all kind of have similar fundamental issues, which is the policies that they sold. And we talk about these pre-Hipaa policies they were underpriced. meaning that the companies are paying more claims than they expected to pay. So from the consumer perspective, that's in a way a good thing. But the bad thing is you hear things about rate increases and you're worried about, is this company going to be financially viable? So I'll start just by talking with the private insurance, and I'll talk about CalPERS. The insurance companies are doing rate increases, which is helping them get back to financial viability. The good thing about the scenario is there are advocates on both sides, so to speak, in that you have regulations in place that only allow them to do certain rate increases. For policies that were after 2004, there's actually some very strict regulations that they can't make a profit from a rate increase. And so it's helped to mute the amount that they really need. So there are some checks and balances in that process. For CalPERS, which is not a private insurance company, it's a public program, there aren't the same checks and balance in there. So you've seen more severe rate increases. It's led to lawsuits where the employees are suing the state because of the rate increases. And I think a lot of that is leading to what you're seeing with this newer announcement. It was from last summer about them due to the uncertainty of the marketplace. So part of that is the financial uncertainty, what they're offering. Part of it from last summer was actually probably COVID related as well. A lot of carriers changed their underwriting practices because a lot of that involved them going into the home to do a face-to-face examination to determine if that person could qualify through underwriting, that they're healthy enough to get a policy in the first place. And it was good that they were being more diligent. The bad thing is it was tough for them to go into homes because of COVID restrictions. And so there were other things going on, dynamics with COVID. So I don't know if they're planning to open that up again. I think that the financial side of it, again, is getting resolved. With Genworth, for example, they have a lot of money saved up to pay these claims. So whatever will happen a lot further down the road if it does happen. And the other thing that's happening is because of all the macroeconomic effects, interest rates are really low. And what insurance companies are doing is they're taking the savings over many, many years, and they're growing that money to pay the ultimate claims. And when interest rates are low, they don't have as much money to pay the claims. So a lot of companies are raising rates because of low interest rates. It actually doesn't have to do with the long-term care claims themselves. All insurance products are affected by interest rates, but the longer it is until they pay claims, the more they're impacted by lower interest rates because of the investment horizon there. So a number of different factors, but that's what's going on. I don't think you should be worried about the policy, but you should be cognizant of how much you're paying each year. And generally speaking, when people get a rate increase, we typically recommend they keep the policy because it's still a great value. So look at the dollar amount of that rate increase, not just the percentage, and you might see that it's actually a very good deal, and you don't want to give up, something that's you're still holding on to that's a really good value. So long-winded answer. Hopefully that answered a few questions out there. We get those commonly.
Okay,
are there other questions? Yeah.
There is one more question from MLCP. They say, "Hi, thank you for this important review. I'm concerned that my pre-Hipaa CalPERS may not adequately cover LTC as I expected. I will need to review benefits. However, can you discuss what has happened to your clients?"
Yeah, and Linda, this is probably a good question for you because you do see clients that have CalPERS long-term care as well, correct?
Yep, we have a lot of CalPERS clients. We have filed many CalPERS claims, and I would be happy to look at your benefits. The guts of the CalPERS contract has remained the same over all these years from when they first introduced it. And so you can be fairly certain, even though you purchased it a while ago, the language in it was, I don't want to say advanced, but it's not bad language at all. But I do want to help you understand how to use that CalPERS policy because it is a little bit unique. And then I'm not sure, discussing what has happened to our clients, I think you might be referring to CalPERS specific. We have learned a lot working with CalPERS, and I'm thankful for that because I think we have pretty much, I don't want to say unlocked it, because sometimes when you unlock something, then you got another door you got to go through. But I do feel as though we have unlocked how to work with CalPERS very nicely. And so we have very good luck with them now.
Okay. Yeah,
Yeah.
and another thing to consider, we didn't talk a lot about this. We talked about the invoices, and that involves usually with reimbursement policies, meaning that you have a proof of loss, you give that to the insurance company, they pay you back for the cost that you spent. And a lot of the policies today are reimbursement, but also a lot of the policies in the past, and even the ones that we offer today, we recommend these a lot, are called cash or indemnity policies, which means that you have to establish that you're eligible for coverage, but then you don't have to file a receipt. And that makes it a lot easier to access your benefits. You're able to use it for independent providers. I know California, obviously, you'll have that in the policy, but you may want to use it for the home modification that Linda mentioned. So again, there's trade-offs to those policies. No one right or wrong answer. There's benefits to the reimbursement in terms of how much you can get for your dollar. But there's a lot of different options out there today. There's traditional, there's hybrid plans that have guaranteed premiums in them, and we're offering both types of products a lot. The good thing about it is the language is the same because they're both considered to be tax qualified long-term care. So all these triggers and all the things we've talked about in terms of activating the policy are generally the same. I know we're kind of approaching the top of the hour. We also can stay a little bit longer if there are more questions. Does anybody else have any questions that are on the line?
Fran Shepherd has raised her hand.
For what purpose is the general law found in
Oh,
Illinois?
you're not unmuted.
You're right.
There
Thank
you
you. You mentioned that there are people that have a 5-bedroom home for like the memory care. I've heard that they usually have 6 bedrooms and they're called a 6-pack. They're half the price of a nursing home. So if you or your people don't need IV registered nurse care, then these people supply food and personal hygiene. I've already interviewed the one that I want to join. I've already showed my sister. It's behind Sprouts here in Claremont. The same couple owns another one in University City with a piano in the lobby. The husband is an Air Force Academy graduate, retired military officer, and he and his wife just have the 2. At the time, it was $3,000 a month instead of $7,000 a month for a nursing home, and most people don't know about them.
Yeah, that's a great point. And Linda, you're running into a lot of the providers. So we're talking about the memory care communities, the smaller, the 6-pack. I love that terminology.
Yes.
What is your experience in terms of working with them? Are those places that you see your clients going to quite a bit, or are there challenges with the insurance policies working with those?
Old policies would be a challenge with these communities because they generally don't fit the definition of a facility. However, I love 6-packs. In fact, I have had quite a few of our clients move out of big assisted living communities where they're paying $7,000 to $9,000 a month and move into these smaller communities, and they do so much better. I think sometimes that board and care facilities have been given a bad name, or people don't think kindly about them, but I'm telling you, my clients thrive. And it makes sense because if you get a good one, which it sounds like what you're talking about, I've
already been there and interviewed. Yes.
Yeah.
And I've introduced myself to the neighbors.
It's it's more of a personal home environment as opposed to a congregate living situation. So yeah, I support that for sure.
It feels like almost a hybrid of getting care at home and going into assisted living facilities. It's still a community, but it's a smaller community.
I have a question.
Yes, hi Nancy. Yes, go ahead.
Okay, so yeah, I interviewed many of these homes, and there is a giant difference in quality. My mother is now 107 and a half and lives in a dementia center. But you also should know that when you go to find one, like when I did, it was in the process of being sold to a different thing. So I said I would only move her there if I were given a statement that I would not have to pay for levels of care going up, because that's where they all get you. You always start at, level 1 or 2 care. They don't need much care. But within 6 months, you're up to level 10 and you're paying twice as much. It's something you really need to look at. Now, I looked at one in Claremont that was absolutely awful. I walked in the door, the whole place smelled, and this is a home. I walked in, the whole place smelled like urine. There was nothing outside in the yard but cement. And it was terrible. I looked at another one in University City. The home was lovely. It was in a nice area, but I didn't think it was adequate because sure, the lady who owned it, who I interviewed, was absolutely nice, very nice. But the person who was there is the caregiver all day. You need to ask, who is there all day and night to do the caregiving? Well, it was a little Filipino girl who almost spoke no English. And she just cooked dinner and lunch for him. That's about it. And otherwise, she would be there to call if there's an emergency. No, I'm sorry, I don't think that's really adequate care even for people with dementia. And they just sat in front of a TV all day long. There were no activities, nothing.
So Nancy, I'd like to respond to what you're saying because you sound like you should go and volunteer to be an ombudsman.
Yes.
I did that.
So many homes, yeah.
I did that for 7 years with the Area Agency on Aging in San Diego. And let me just say a couple things. As within any industry, you are right? We want to have the best of everything. The point of long-term care planning is exactly what we're talking about, so that you have some choices in the matter,
Right.
so that you can go where you believe will meet your needs best. I'm assuming you have long-term care insurance, Nancy?
I do for myself, but this was for my mother and she did not.
Okay. So yay for
I am
you.
paying
Yeah.
out of pocket for her.
Okay. Well, you're a great advertisement for why people should buy long-term care insurance.
Right, absolutely.
Yeah.
And I think it's important to understand that you shopping for providers is still a part of this. You really have to go, like you're saying, that's the reality. You want to find the right situation for yourself, for your family, but the insurance itself is going to activate the money to pay for that.
Right.
You still need to perhaps negotiate even with the providers themselves. The billing practices aren't standardized. It isn't like, okay, I submit the bill, the insurance company pays for it. They give you a pool of money. And the longer your pool of money lasts, actually your claim can last longer too.
Yeah.
So you might have a 3-year benefit insurance policy, but because you're actually saving money being in like the 6-pack home, your policy might last twice as long. It might last 6 years. Again, so those are important considerations. You do want to be involved and you want to shop the market and make sure you're getting to the right place and have that choice that Linda was talking about. These are great, like real stories, because this is the reality of it, right? It is the theoretical and this is the reality. And I think it's good to see that.
Yeah, I don't think most places tell you that they might negotiate with you, but quite often they have vacancies. And well, this was at the time I was looking, they had vacancies and they really wanted more people. So I said, no, that's too expensive. I'm not doing that. So then they were willing to negotiate. So I don't know that people always know you can do that.
Yeah. And if you're private paying, you could do that. If you have a policy also that helps you, because the provider does like the idea that there is money backing, the client, right? They have more guarantee that nobody's going to shortchange them. If it involves Medicaid, again, generally that's for nursing homes, and it doesn't give you as much choice. Although there may be waivers, and Linda can also help you with that if you're dealing with Medicaid or Medi-Cal. Okay, let me just see if there's any other questions on the line. I saw a couple more chats pop up here.
There are two. I'm not sure. So it's from Peter Maxwell. I'm currently updating planning/living trust documents. To what extent would you suggest having one LTCs? I've had one with MetLife since 2004, directly brought into estate planning and so forth.
May I take that one?
Yeah, go ahead, Linda.
Okay. So Peter, what I would say is if you understand your contract and you know what benefits you have, then what you should do is make sure that your first line of defense or healthcare power of attorney has a copy of that. You don't have to put it in your estate planning packet per se. You need to have that contract available at the ready and also given to somebody who will be helping make your healthcare decisions. So that's the extent, just as long as somebody has a copy of it and you know what you have. but you don't have to do anything else like that per se.
Okay, thank you, Linda. I appreciate
Yeah,
it.
you're
Very
welcome. I think there's a question about premiums tax deductible.
Yeah, Eileen is asking, are premiums tax deductible?
That's for you, Mark.
Yeah, that's an area of expertise. A couple of things. If you're an individual and you're paying long-term care insurance premiums, they are tax deductible as a medical expense. Okay, but most people that are buying it today, if they're buying a new policy, because they're qualifying health-wise for the policy to begin with, they generally don't have medical expenses that exceed 10% of their adjusted gross income to really get an economic benefit from that. If you bought a policy years ago and you actually do have a lot of medical expenses today, then yes, that premium might be added to your other medical expenses as a deduction, and that's worthwhile. But there are some other ways to benefit in terms of tax deductions for long-term care insurance. For example, almost any business owner that's profitable is allowed to write their long-term care insurance premium as a business expense, subject to it being reasonable compensation, which again is not too big of a limitation. And if they're not a C corporation, so if you're an S corporation or a partnership or a sole proprietor, you're limited to an annual limit, but it's a pretty robust limit based on your age. Maybe several thousands of dollars of deductions you can take off of your long-term care insurance premium. So that is deductible for any business owner, or if you're the spouse of a business owner, you can also take advantage of that. One other way to pay for long-term care that comes to mind that's a big advantage if you have it is if you have a health savings account. You can also use your health savings account to pay for a long-term care insurance premium up to an annual limit. But again, the limits are pretty robust. And what that means is that you can essentially use a pre-tax vehicle where you're funding the HSA, you're using the HSA money to pay for your premium. And even if you do that, the benefits are still received tax-free. So those are ways that the premiums can be you can be tax efficient with how you fund your policy. In almost all cases, the benefits are what are called tax qualified, which means that when you receive the benefits, like we talked about the reimbursement from the insurance company, you don't pay tax on what you're getting paid back. So the nice thing is if you take a deduction, you still get the benefits tax-free. That actually is, there's no real downside to doing it that way, again, because you don't have to pay anything back to the government for doing it. So hopefully that was a quick enough summary of it and answer your question. That's a great question. Fran, you have, or I think it was Fran, right? You're on mute still. You'll have to unmute again.
I am. I've told my sister that I have enough income, the auto pay into my checking accounts to cover a 6-pack.
Okay.
She and the kids could sell the house and I would have enough income to cover that without touching the long-term care. I think I would only need it if I get sick and need to go to a nursing home. Then I would need the long-term care to kick in.
Yeah, and that makes a lot of sense. And I think doing that financial budgeting is really a key part of this, both when you're deciding how you want your retirement to last, like how you want your retirement income to last, but also affordability for the policies. You kind of brought up a good point, though, is do you find, Linda, that people are not actually utilizing their long-term care insurance when they're eligible because they're saving that money for
Right.
needing it for a higher, like
Yes.
needing for a nursing home or something?
Right. So you see, I just about jumped out of my chair. My advice to that is definitely not to preserve. And if you moved into a 6-pack, you probably would be moving there because you needed to move there, correct?
My sister and I will draw the line. We'll put each other around in wheelchairs, but we will draw the line at diapers.
Okay. So
Yes.
you just answered all right. So if that's the case, you need to file a claim on your policy, and here's why. The vast majority of people will never go to a nursing home and stay longer than 21 days. And so if you hold out your benefit and not filing a claim because you think you're going to go to a nursing home, you may never actually get money out of your policy. You should file a claim if you're eligible and you're moving to a 6-pack. You need to file a claim and start pulling money out of your bank account or start pulling money out of that policy, because the odds of you moving to a nursing facility is not very high.
Yeah, but let you may want to talk to Linda about the details of your scenario.
Right.
If it's something you're eligible for.
But it's still possible.
Yes. Well, yeah. If you're eligible for it, you also want to look at the policy itself and what benefits are in it. So Linda's an expert in those things.
Yeah.
I think you may want to talk to her about it.
And yes, to answer your question, Mark, people preserve their benefits, and it's frustrating for me to see that because there's no reason to do that. But people in general, especially if they're savers or if they've lived through the Depression,
Yes.
they just feel like, oh, I don't know if I should spend that money or if I should take that money, but I'll talk to them and I'll help them see that that's not right thinking.
They don't want to dip
Yeah.
into what I've saved for the kids to inherit.
And Nancy, I see you have your hand up there. You have to unmute again. Sorry about that.
Can't hear you.
Yeah, she's finding the unmute button. Oh, nope, not yet. Hey, Nancy, you'll need to unmute your.
I know, I got it.
Oh.
I lost the bottom. I can't see your screen thing. I can just see the thumbnails of who's there. So I lost that back away. I have terrible internet acceptance in my house. So one quick question. If you have a relative who is a healthcare provider, are you allowed to hire a relative?
Generally, generally, no, you are not. It depends on what relation the relative is. If it's an ex-son-in-law, yes. If it's somebody related by marriage or your immediate family member, no.
So your
What about-
member who's an RN, I couldn't hire her.
It doesn't matter if they're an RN, right?
Well, I will point out one thing. If it's a cash indemnity policy, can you
Yeah.
use the money from the policy to do it? Use
That's a
it?
good point.
Yeah.
Yeah. So Nancy, some policies have what's called cash benefit alternative, just depends on if it's in your contract. And in that event, and people do that, they hire a family member and they use the cash alternative to pay that family member.
Yeah. So definitely take a look, or like I said, talk to Linda about your actual policy and see what benefits are in there. But there may be some benefits, again, because there's a lot of unique and useful benefits in these policies. A lot of people don't even know about some of the benefits they have. There are some benefits I'll just point out, like bed reservation, like that. Well, if you want to be taken home from a facility, they'll reserve that spot for you so you can go back. There's respite care for your family members if they're providing care, that kind of thing. So just take a look, because there may be some, it may not be the majority of the benefits, but useful things to know about. So I know we're kind of approaching the end of the session here. I really appreciate everyone's participation, and so much to Linda, again, for your expertise. Again, if you want to contact Linda, her information's on the screen here. Just give her a call directly or email her. And again, thanks so much for having us. Suzanne, anything that you want to do to wrap it up? I know she may have jumped off here.
No, that's it. I appreciate your wonderful presentation, and thank you for the great questions and the even better answers. And we will leave it at this. We'll have the video of this event up online by tomorrow.
Thank you very much, both of you. It was a really good presentation.
Thank you.
That's
Happy
one-
New Year,
Yes.
everybody.
Here.
Thank you. I'm going with Happier New Year.
Yes.
Bye. Bye.
Bye-bye.